How much should you save in a 529 account? This is a college savings account for your kid, and it's an important question. Before I jump into the details, a quick disclaimer. This is not specific advice for your situation. Highly recommend working with a professional to make the right decisions for you. So to start with, what is your goal? Do you want to pay for all your kids' college? Do you want to pay for a portion of it? Or do you want them to pay for all of it? It's something to understand your expectations first before you decide how much you need to save in a college savings account like a 529. So first, I'm going to talk about why to go to college, what's important about it. Second, kind of a landscape of the current college costs. Third, what is a 529 account? And why is it a college savings account? Why do people use it? And then finally, my own personal experiences with 4 kids, including one in college and one applying this fall. So why college? So this is information from the JP Morgan College Planning Essentials. Really, the key takeaway here is children, people that graduate with a bachelor's degree, have significantly greater annual average income as well as lifetime income. In this situation, it's about $40,000 additional per year for a college versus high school graduate. That said, it's not free, or most colleges are not free. Most in-state colleges for 4-year in-state tuition plus room and board is somewhere between $25,000 to $30,000 per year. Now, this depends on your individual state. Some could be a little higher, some could a little bit lower. But on average, the cost for a 4-year in-state college is about $30,000 per year. Now, that is definitely differs depending on the type of school. If you go to a private school, the current cost is around $63,000 per year. I said that right, $63,000, with some elite colleges are getting close to $100,000 per year. That's right, almost $100,000 per year. When you think about 4 years, that makes a big difference compared to, for example, the 4-year in-state college I mentioned before. So why a 529? Why use that to save for college versus just put money into your an investment account or into the bank account or other vehicles? So the big advantage of the 529 is what's called the tax deferred accounting. So what happens is the money you put into the account grows tax-free. And if you pull the money out for qualified education expenses, which I'll talk about in a second, there's no tax on the withdrawals. So you get tax-free growth and tax-free withdrawals. And even some states, not all states, but some states give you a tax deduction for the contribution. There's some additional benefits, such as you control the assets while they're there. You can decide how they're invested. You can decide when they're withdrawn. If they're not all used, there's new laws which allows for money to be used in a Roth IRA. So there's a lot of flexibility and control. In addition, for a lot of our grandparents we work with, they may use it for more estate planning strategies, since the money in a 529 plan is not included in your estate. So there are many advantages to owning a 529. Once you stop contributing to it, you want to start withdrawing the funds for your child's college. There are different qualified expenses. So the simple ones are the child's tuition, room and board, books and supplies, equipment. They've even gone the last few years and added things such as up to $10,000 of student loan payments. In addition, there's up to $10,000 of K through 12 tuition could be used for 529 plans. And as I mentioned earlier, there now is an ability to actually use up to a certain amount for a Roth IRA for the child if it's not used for college and a number of other requirements of the 529. So the big question we get from most of the individuals we work with is how much should I save in a 529? I really want to help pay for my son or daughter's college, but I have to focus on my retirement first. I always like to say you can take a loan for college, but you can't take a loan for retirement. So it's important that you focus on your saving for retirement first, and then look at how much you could save for their college second. What are the goals? As I mentioned earlier, there's a big difference between an in-state 2-year versus 4 years, an out-of-state public or a private school. So understand kind of what type of school you're looking at and how much you're willing to support. And then in addition to that, our typical, if your retirement savings are met, we typically recommend folks save for about 50% of the expected college costs in a 529 plan. So those expected costs, if you're not sure, we typically assume an in-state cost versus the out-of-state or private, unless there is a certainty regarding the use of going out of state or private school. Because keep in mind, our experience as being financial planners is that, besides the 529, parents pay for college through their current cash flow. A lot of them are typically in a high income bracket. They're doing well at their jobs and they have additional money to, support for cash flow. The student may take some student loans. There's some research that shows that students that pay a portion of their college actually do better because they have some skin in the game. And then like many folks want is either an academic or athletic scholarship, but those are a lot harder to achieve than expected, so would not plan on them for helping pay for college. But then the other side for people look at, well, I don't want to save too much in my 529. If I put all the money in there, what happens if I save too much and they don't need it for college? What if they get a scholarship? What if they don't go to college? Well, there's some options. One, which is not the preferred, but an option, is you can withdraw the money. Unfortunately, you're going to pay, taxes on the earnings at ordinary income rate, which could be higher than capital gains, and a 10% penalty on those earnings. So that's not preferred, but it is an option if there was no other choices. You can also change the beneficiary to another child. You may have multiple children like I do and expect that maybe if one doesn't need it, the next will. As I mentioned earlier, there's the option now to use a set amount up to $35,000 for Roth IRA after they graduate. Now there are limits to that as I noted here on the page, but that is an option as well. In addition, the account doesn't expire. So at some point you had grandchildren, you can always name them as a beneficiary. So there are some flexibility options, but if you don't expect to need it, I would not oversave in a 529. So in summary, a college degree results in a higher of lifetime savings earnings. So if you can afford it, it would be great to save something in a 529, especially given some of the tax benefits on the growth. That being said, college is expensive. So how much you put aside versus how much you put in your retirement account is an important question to ask that work with a financial planner would help. And that is a situation where what other goals do you have? Is it a retirement? Is it a second home? And that would help determine how much you can reasonably save in a 529 account. So finally, what I would say is I recommend working with a fee-only financial planner like Financial Symmetry, where I work today, to determine what is the right amount for you to save, not only in your college savings for your children, as well as for retirement savings for you, so you can not only enjoy your life today, but also save for the future. Thank you, and have a great day.